This 2008 medium-term budget speech coverage is brought to you by the Chartered Accountants, who are members of the South African Institute of Chartered Accountants. And here in the studio, Sunshine and I are being surrounded by Chartered Accountants tonight. Billy Joubert, good to have you in the studio, from Deloitte, tax director there. Of course, David Shapiro, you're a CA as well.
Oh.
That's why you're so Natalie. Billy, you see how Natalie dressed David is tonight. Usually he comes in here with a torn T-shirt. But because we're on camera now, we've finally got our YouTube story working. So tomorrow you can go and have a look at your interview on YouTube.
Oh, wonderful.
You can even pick up all those millions of people who've wondered what David Shapiro looks like. You know, those guys who don't watch you on all those other channels that you're at, David, will be able to look at it too. Anyway, it's YouTube // Moneyweb. Billy Joubert, though, that's not the purpose of our discussion tonight. It's more to look at what Trevor Manuel is going to be saying in what we call the mini budget tomorrow. Are there any surprises likely?
I don't think so. The mini budget isn't really the time for announcing huge tax changes unless there was some reason why we expected to see a deviation from the current tax policy. At this stage of the year, we're quite well through the program of implementing tax changes that were anticipated in the budget speech in February. I think we would probably expect to see tax collections down for the year to date. I don't know whether we'll get any indication of where they're sitting.
Why would that be?
Well, I think that in specific areas, for example, VAT, to the extent that there's lower consumption, possibly the National Credit Act biting, you might well have lower consumption, and therefore, VAT is essentially a tax on consumption. In terms of individuals, probably not too much change from what we expect. Something like transfer duty, it's a fairly niche tax, but again, given the state of the property market, we would expect to see significant discrepancy there.
So the economy taking strain, that will hurt VAT,
yes,
and transfer duties on properties, because as any estate agent would tell you, that the market there seems to have fallen out of bed. That would also have an impact.
Yeah, absolutely.
What about things like customs and excise duties? We have seen trade starting to taper off now, or is it a little too soon for that to be impacted?
No, I think it will be impacted. As economic activity slows down, so tax collections also will. It's much easier to over-collect, as SARS has been doing for the past few years, when the economy's roaring along, than in the current environment. And I think the over-collections are both a reflection of SARS being a more efficient place, much more efficient, but also where the economy's been, and it's obviously in a different place now.
Billy, let's not forget, this is a budget process that the government goes through. Once a year we get the budget speech in February, and then halfway through the year it's almost like an update. How have we been doing so far in the past 6 months? Up until now, the mini budget's always had fairly good news relative to what was said in February. Do you think there could be a change this time round?
I don't think from a tax point of view, tax tends to follow along after things like economic policy. I really don't expect to see anything terribly dramatic. We might get some indication of the new dividend tax, what the timing is on that. It's taken longer than was originally anticipated.
What are you hoping for there?
Well, it's a fairly neutral thing. It's just the transition from STC to the new dividend tax. It requires the renegotiation of some of our double tax agreements, which is obviously taking a bit longer than people thought.
So it's more
originally.
of a technical thing on that
It's fairly
side.
technical, yeah. It will be some loss of revenue again for the government, because some shareholders will be able to claim double tax agreement relief. So there's some loss of revenue there. So I don't think they'll necessarily be in any great hurry to implement the change.
Trevor is, though, opening the books, as it were. What should we be looking for?
I would think the main thing is if he'll give us any indication of tax collections. That's going to be big news at the end of the year, because that will determine, for example, whether we see tax cuts, which I think is highly unlikely. The big news, of course, in February was the cut in the corporate tax rate to 28%. I don't see that continuing, but is it sustainable at that level? It might give us some indication. The other thing for individuals, we've seen tax brackets adjusted by better than inflation. Is that going to be feasible going forward, especially in the higher inflationary environment? That largely depends on how tax collections looking.
So if you're a company, don't expect the tax rate to go below 28%. In fact, it could even go back up to 29% in future. Not tomorrow, but at some future date. And if you are an individual, you've seen every time your increase, in fact, you've been helped, this thing called fiscal drag, by tax cuts every year. Yes. Perhaps not in 2009.
Well, not to the same extent. I think we might be doing well if we actually keep up with inflation this year, given that inflation's at much higher levels than it's been.
There's also some talk that Trevor Manuel might start budgeting for a deficit. which means spending more, let the government spend more than it's bringing in, which is usual in a developing country, one that needs to be investing in its infrastructure and other things. Do you think we'll see any indication of that?
Well, that again is not really relevant to tax. I mean, tax is a way of trying, well, I say it's not relevant. Tax is a way of trying to avoid that. The question is, will he actually be pushing tax rates up to fund, for example, higher social responsibility spending, that kind of thing? So I think maybe a little bit premature in terms of tax policy. Tax policy is likely to follow on from any changes in the broader economic policy. But I think the big news at this point is how's the economy performing and what impact is that having on tax revenues.
Oh, we're getting some great insights on that. Our thanks to Billy Joubert, who's tax director at Deloitte. David Shapiro, tomorrow night we'll be chatting to someone from SAICA on that, and we have got a couple of our colleagues who will be in the lockup tomorrow morning. So all the news on the mini budget on Moneyweb coming at I think it's 2 o'clock when Trevor Manuel starts speaking. You can pick it up there.
I wonder if the market didn't respond to that. I think there were reports about going into deficit, higher social spending, together with the headlines this morning on business day. And we saw the rand coming under a bit of pressure today. Yes, admittedly the dollar improved, but it could be associated.
This 2008 medium-term budget speech coverage was brought to you by the Chartered Accountants, who are members of the South African Institute of Chartered Accountants. This 2008 medium-term budget speech coverage is brought to you by the Chartered Accountants of South Africa. David, what are they doing to me, these people? I mean, we read the same thing twice. Okay. The Chartered Accountants of South Africa, who are specialist tax advisors, bring you this coverage in the interest of providing professional tax solutions to minimize business tax risk. That's the part I should have read twice. To solve any tax problem, phone a chartered accountant first.